10-year note yields opened the session moving lower, trading down to 360 and making a new year-to-date low, the third time it's done that over the last 4 sessions. But it didn't last long. We saw yields rally, getting up to as high as 368 before closing out the session at about 365, slightly higher in the day. Now, during the session, during the morning anyway, we had CPI come out, a stronger than expected core reading, push those yields higher as we saw those rate cut expectations diminish for a 50 basis point cut, one that we'd seen odds as high as 100% going back over the last several weeks to down to about 30 to 40% over the last week or so. Now we're seeing those 50 basis point cut odds hovering at around 10%. So right now the market eyeing a 25 basis point cut after today's inflation data for next week's September FOMC. Now, after CPI, we did get more news. We had a $39 billion 10-year note auction, which was very well received, but didn't see yields move down. Actually, yields moved higher, despite the fact that we saw strong demand for today's 10-year note auction. Again, seeing yields move higher up to 368, but closing the session down closer to 365. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll notice volatility after CPI continued to move lower, seeing volatility trending lower since last Thursday. After the event risk that we had today in CPI, we saw a volatility creeping lower, getting down very close to 1-month lows. Lastly, let's talk about what we have tomorrow. And tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. But before that, we'll get an ECB meeting where they are expected to cut rates by 25 basis points. Then we'll get PPI. So the second reading of inflation this week after today's CPI will be tomorrow's PPI. And then we'll get a 30-year auction in the afternoon. So midweek yields move lower, then higher, settling at about 365, just a stone's throw away from the year-to-date lows ahead of tomorrow's ECB meeting, PPI, and a 30-year auction.